Hello, chart watchers, and welcome to this Thursday, December 21st Market Watchers Live show with Aaron Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins, so you'll have roughly 24 hours to review it. If you'd like to review an older show, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, we'll select stock symbols from your requests, and we'll use those in the 10 in 10 segment at 12:50 Eastern Standard Time, where we'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live now airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we'd love to get your feedback. In the lower right portion of your screen, you'll see a How'd We Do section with a link to a very brief survey. Let us know what you think of today's show and provide us suggestions on how we can improve the show. For those of you joining us for the first time today, welcome to the show. We are certainly glad to have you. And for our regulars, welcome back. Just a couple of quick announcements before we get going here. I do want to mention that tomorrow we will be having a year-end review. So we'll be looking back at 2017, maybe even give you some glimpse into 2018. But it should be an interesting show to wrap up our live shows for 2017. Just as a reminder, for the Christmas holiday on Monday and New Year's holiday the following Monday, there will be no Market Watchers Live. And also the shows next week between the two holidays will be eliminated as well. There will be a best of Market Watchers Live that will be airing each day next week. And it'll include interviews with some of our recent special guests, some of the educational segments that we've gone through. So continue to check in on the webinar page, and we'll have a schedule for you on those days. Our live show after tomorrow, our next live show will be back on Tuesday, January 2nd, 2018. And with that, I'll bring in my co-host, Aaron. How are you doing this morning, Aaron?
I'm doing quite well this morning. It's a beautiful day, albeit a little bit cold.
Ooh, cold out there? What's that like?
40? Oh, it's right around 52. And we're going to get a high of 65, so a nice chilly day for us.
Yeah, it's actually been up in the 60s here, just south of Charlotte the last couple of days, so it's been pretty nice.
Yeah.
Rainy yesterday. Be better to be a duck. And I'm not talking about the Anaheim Ducks.
Yeah, it's been really rough, but we won't talk about hockey.
Yeah, we won't go into that. I know we got a lot going on today, several special segments, so I'm going to let you go over the agenda with everyone and give us that first market update.
Absolutely. Oh, we did have a few announcements, though, and I didn't put those up there even while you were talking about them, so I'll just put them there right now. All right, so our agenda today, we're going to do a segment on chart breakouts. I found some, and I'm sure that Tom found some that you might find interesting right now. We will have the 10 and 10 to 1. And I've actually put in the anatomy of a trade. We're going to do that right before the 10 and 10 to 1. And for the 10 and 10 to 1, we have ST Microelectronics, STM. That will be our first 10 and 10 to 1 symbol. So you can go take notes on that. And then we will have, I will talk to you about a book of the month, a book that I find very helpful. And I know people ask us all the time, what books do you recommend? Well, I'm going to recommend one today. And then we'll finish up with our mailbag questions and live chat room questions and wrap it up from there. With that, let's go ahead and have our first market update. All right, here we go with our candle glance. And as you can see, markets are having a great morning. We have the Dow's up at this point. We're starting to consolidate a little bit, coming off intraday highs. Same with the S&P 500, currently reading, let's see, 2688.31. NASDAQ is having a decent day as well. It popped up and then retested yesterday's close, but it has resumed its rally, although also pulling back like the other major indexes. We're seeing Russell 2000 taking off today. Nice to see the small caps getting started here and doing what Tom says they should be doing. And we can see the TSX is up, opened way down, gap down, but it made it back into positive territory and bounced off yesterday's close. And although not at intraday highs, it's still up slightly. We can see Treasury yields are down today, reading at 24.86. And we have UUP is mostly unchanged right now. It's been spending most of the day on the positive side, but it's mostly unchanged now. Commodities having in a trading range right now after a really deep decline this morning. Was able to overtake those losses and actually put in some profit right now. We have USO up slightly at 1164. Gold opened lower, but is now in a straight up rally. Reading right now, GLD at 120.32. Volatility index mostly unchanged. We're reading just under 10,975. And advances are leading declines. Let's go to our member homepage. And I want to take you to our market summary. And there we go. Let's go look at the sector spiders. Energy is lighting it up right now. It's on fire. So it's up almost 2% right now for XLE. Utilities continue to suffer, down over 1%. The laggard. As far as our U.S. industries, oil services, natural gas, we're seeing at the top of the line, but we also have airlines and banks in there as well. Utilities, as I noted above, are lagging, and disk drives, semis, and hardware are also lagging right now. International ETFs, Brazil is leading along with China and Canada. We also can see South Korea, Mexico are the ones that are lagging right now. So let's go really quickly back to our member homepage, and we can see what our predefined alerts are telling us. And right now you can see the only alert for today is the energy sector BPI has crossed above 70. So energy is a great place, and I'm pretty sure we're going to talk about the energy space a little bit later. But that concludes our first market update.
All right, sounds good, Aaron. Yeah, it's kind of an interesting day. We do see the small caps, coming back up again, which is nice. This is the time of the year when we do tend to see strength in the small cap stock, so it's nice to see that resume. Just wanted to go over a few charts as we go through and take a look at some of the economic news that we saw this morning. By the way, there was a bunch of economic news out. Q3 GDP, we got the final reading this morning at 8:30, and that was at plus 3.2%. Market was looking for plus 3.3%, so it did come in just slightly below expectations. Initial jobless claims, 245,000. Market was expecting 234,000. So a little bit of bad news on the jobless claims front. But December Philadelphia Fed survey, we've been seeing some really strong economic numbers in this area the past couple of months, and it continues. The reading today, 26.2. The market was looking for 21.8, so a very strong Philly Fed survey. October FHFA housing price index. Remember the housing economic reports that we've seen earlier this week, all have been strong. This one was as well. Rose 0.5%. The market was expecting a rise of 0.4%. The only thing I would maybe caution there is that it is an October report, so we are looking quite a bit in that rearview mirror. November leading indicators then came out 10 a.m., also stronger than expected, rising 0.4% versus the anticipated 0.3% rise. So with all of that, you can see the 10-year Treasury yield continues in its breakout mode. We are down about 1 basis point today, but after the huge rise that we've seen the last 3 or 4 trading days, I guess everyone probably would give the 10-year Treasury yield just a little bit of room to the downside. So I don't really think there's anything big to discuss there. Within some of the sectors, though, and I always look at the big four, my big four are the sectors, the aggressive sectors. I like to see them continuing to perform well. And you can see first here, the XLY, consumer discretionary, up more than 0.5% today, and just really not really showing too many signs of pausing, just continuing to move to the upside. We've seen this now for about 5 or 6 weeks, where we have just had this straight up move since breaking above this triple top. and retail has been a big reason for it. There's a lot of areas in consumer discretionary doing well, but retail certainly has picked up, and that has helped the XLY considerably. Within the XLY today, though, thought maybe we'd take a look real quick at the broadcasting group, DJUSBC. Look at this breakout that we're getting here on a short term. I love this move up at the end of November, and notice the pullback held that rising 20-day moving average. We got a nice bullish golden cross, and we are continuing to see movement to the upside. And a lot of that can be attributed to Disney. You can see Disney recently making that breakout, also having a pretty good day today, up over 1%. Let's move on to the XLK. This is the technology ETF. And of course, technology ran into the momentum issues back in late November, higher prices, lower MACD. And that after that, we saw money rotating away from the group for a period of time, but it is back for sure. We are strengthening. And the group that I'm kind of watching here, this is the leader today, the DJUSWC, which is mobile telecommunications. And we've got a pretty significant area of resistance at about 320 that I'm watching, because after selling off for about 5 or 6 months, you can see this gap down is starting to look like an exhaustive gap. We rose up to that 320 level. Notice these pullbacks are holding the rising 20, and that 20 is just crossed over the 50 for a golden cross. So a breakout above 320, I think, would be very, very bullish for the mobile telecommunications group. Within the industrials, let's pull up the XLI. And what's kind of interesting is that, all these sectors don't run into trouble at the same time. Recently, we saw that negative divergence form on the XLK, but check out October, and you'll see industrials having momentum issues of its own. You can see the move up here in late October was accompanied by lower MACD, negative divergence down to the 50-day, and then they start to move higher. So I think a lot of folks look at these negative divergences and think, oh, we're at a top. But a lot of times all you need to do is just simply unwind these short-term momentum issues, and then these areas are good to go again. And I think that's what we're seeing here with the industrials. Within the industrials, Aaron mentioned airlines earlier. I think this is a group I really wanted to see this group make this breakout above the 280, 285 area right here, and we did that. And since we've done that, we've been going up almost every day in the airlines. And it looks like this group is heading for 305 to test that early July high. Finally, financials. If you take a look at the XLF, very similar to the XLI. October, we ran into momentum issues, higher prices, lower MACD, pulled back, hit that 50-day. We reset the MACD, and now we're back off to the races again. Yesterday, a little concerned maybe because banks weren't following suit with the 10-year Treasury yield. Well, that was a one-day problem because the banks are flying today. Even though we're holding back on the 10-year Treasury yield, we're down a basis point. You can see that the bank's actually up 7 points, 1.5% today, and this would represent a fresh new high. Now, this is not an all-time high. We could go back and look at this monthly, long-term monthly chart. And remember, before we had the huge pullback in, well, not a pullback, more like a crash in 2007, 2008, we were up at this index somewhere close to 600, 575 or so. So we're at 480 now. Still got room to go to hit that high. I think with interest rates looking to go higher in 2018, I would suspect that banks will continue to perform well and could be bought on pullbacks. A couple of stocks in the news with earnings. Accenture, ACN, came out, beat expectations, $1.79. Market was looking for $1.66, and you can see a beautiful move up. I'm a little concerned about this candle today. We do have a shooting star off this uptrend, so we'll have to wait and see how we finish. The one thing you want to be careful about is not making a too early of a not coming to too early of a conclusion on candlesticks, because remember, these candlesticks can change throughout the day. If ACN were to close near the high of the day, there would be no shooting star. So we do want to see how it closes, but right now, not exactly the best candle, even though the stock is up $5 or about 3.4% today. ConAgra, CAG. Keep in mind that when these stocks gap up on heavy volume, everybody wants in because there's good news. Market makers end up getting on the other side of these trades. And as a result, that's why these gap ups tend to fill. Not always, but many times they tend to fill. Check out ConAgra today. came out with better than expected earnings, 55 cents versus 52, gapped up nicely and has already come back down and filled the gap. So everybody jumping in it early. You've got, of course, maybe a little bit too much speculation going on there. A lot of this built in too, by the way. You can see a huge move up here for about 5 to 6 weeks in ConAgra heading into earnings. We get the good news, we gap up, and now it could be one of those buy on rumor, sell on news kind of events. KMX, CarMax, this is one of the reasons why, I get a question sometimes, if companies beat their earnings one quarter, don't you kind of get that feeling that they're going to beat again the next quarter? And my answer to that is no. I mean, you do have a number of companies that continue to perform well and tend to outperform and beat Wall Street estimates over and over again. Those are the elite stocks, as I would call them. CarMax came out with great news 3 months ago, gap up, kept moving higher. This is actually a trade that I failed on. And today they came out and they announced that they fell short of estimates. So 3 months ago, things look great. Now, all of a sudden, look at the volume, very heavy already today, and it looks to be breaking down. And this one was selling off into earnings, which is kind of interesting. So it's almost as if, some traders out there, many traders out there expected a disappointing report. And finally, Paychex, they actually met expectations. And after a huge move to the upside, meeting expectations apparently wasn't good enough. And PAYX took a little bit of a hit here. Later today, we do have Cintas, CTAS, pull that up real quick, and Nike reporting. Cintas is expected to earn $1.26, and Nike is looking for 39 cents. You can see CTAS, nice rally heading into earnings, so a lot of good stuff already built in here. And if you pull up Nike, you're going to see the exact same thing. Look at this move. So I don't think there's any doubt in my mind that we are going to see, I don't think there's any doubt in my mind that we're going to see a good report here on Nike. This is what all this is telling me. Nice volume, straight up move. This is anticipating a good report. And I believe the entire footwear index, the DJUSFT, also has been doing well. Of course, it's being led by Nike, but you can see the huge move here. Also SCVL, Shoe Carnival. You can see the huge move here. There's just a number of stocks in that area that have been performing well. So with that, I think this would be a great time to transition over into the chart breakouts. I know you have some, Aaron. Why don't you go ahead and get it started?
All right, chart breakouts. I went through and I guess the best way to say is I took a predefined scan and I added a few things in it that I like to use. So I thought I'd show you first how I did that. So the first thing I did was go to, let's see, where's the scanning workbench here? There it is. All right, so what I did is I went to the predefined scans. I decided to look at new 52-week highs. So I clicked on it, and of course there's 429. And I'm like, I do not have time to go through 400 plus stocks before the show. So I decided I would go ahead and edit it a little bit. So if you saw there, I'll bring it back, you can edit the scans over here. So you already get the first part of the scan you want. And so all I did is I went in and adjusted it to have what I wanted. Let's see. I'm trying to remember if I saved that scan. Maybe I didn't save it. But basically, I added that I wanted stocks that were above their 52-week high. But I added in that I wanted the 50-day EMA above the 200-day EMA. And so that's where I came up with narrowing those down. Then it brought it to like 200, which was a little more manageable. So I decided to add in that the PMO was below its signal line. So it hadn't had a positive crossover yet. And I think I came up with, I had about 4 or 5, about 40 stocks to look at that point. And that's a lot easier to do quickly in my, in the 10 per page. So there I have them right in here. And so I had about, 8. So I'll just run through them. I haven't annotated all of them. So I'm just going to talk about them and let you know what I'm thinking about. But these are stocks so that, remember, they have a 50 above their 200. day EMA. That means that they're in a bull market configuration and they're making new 52-week highs. And you can see here the PMO is below its signal line, but it's turned up. And a really nice positive bullish confirmation, I guess you could say, with this rising PMO along with the rising price bottoms here. But I see a flag right here, and I think that's a real positive. Obviously, that's a continuation pattern. If we get the breakout out of that flag, which we just did, then the expected upside target would be the length of this flagpole. So, obviously they don't always meet their targets, but they are minimum upside targets. So they could go even higher than that. So I thought this one looked pretty promising. You've got a really nice scooter on it. If you want, you could wait for a little bit of a pullback toward that breakout point and then hop on board. But I thought that breakout looked really interesting. Dicom Industries, DY. Another very similar chart pattern here with the flag and the breakout from that flag. And in this case, you're also seeing a breakout above some resistance that we saw earlier in the month. And of course, that was even a breakout from these highs back here in April and May. So the PMO is, it's a bit overbought. So I would probably pass on it for myself. But it is configured positively again with the rising bottoms on the PMO. And it is turning up and looks like it will get a buy signal. But that would be my only thing that I don't really like about that. Hilton, I thought, looked really interesting. We're not looking at flag formation here. But what we are looking at is a beautiful breakout from overhead resistance here. The only thing I might worry about, I'm going to just turn this into candles here. I don't really follow them like Tom, but I wanted to look at this last one. So this candle doesn't look all that great. So that would be my warning for you right now with that long tail to the upside. But I do see that PMO turning up. It's not in particularly overbought territory at all. It's sitting kind of the top, kind of where you would say overbought because near term, but we could see it definitely can go higher. And even back here, it was even higher than back here. So we've got a nice scooter. OBV looks pretty decent, but that would be my only concern about Hilton. Let's look at Nikken Mobile, NQ. This is quite a breakout as well. This one from a declining trend channel, I would say. I might be able to draw it into a descending, falling wedge, which is a bullish pattern. But I like the fact that the PMO did pull back quite a bit. It is starting to turn up. We could see volume is, it's all right. It's been going up on the OBV. I didn't like the pullback there on that heavy volume, but we're making up for it today for sure. And you could see that breakout not only brings us above this near-term top, but also puts us above the tops we had earlier in the year. So I thought that was an interesting breakout. Let's see, a few more. I need to leave you some time, don't I, Tom? All right, so we've got a rising PMO. It's bottoming nicely in near-term oversold territory. We're getting that breakout here, just slightly. It's not all the way out, but it is still a breakout, and we are hitting new 52-week highs. So I thought that looked interesting. PBF, nice breakout here, and I think you could see there was a ascending triangle, which is a bullish pattern, and it did execute with that breakout. Look at the volume. OBV is looking good, and of course you can't argue with such a high scooter right now. That looks great. But seeing that PMO pulling back and now it's turning up, I thought this one was very interesting, and it is in that energy space, which, as we've seen, is starting to take off. So that could be an interesting play. Torchmark, TMK. We really got the breakout yesterday, but I pulled it because we're getting a little bit of a pullback on that, just a little bit. Obviously, we're still looking at intraday lows higher than yesterday and intraday highs. But the fact that we are coming back a little bit more toward that breakout point, I think is positive. PMO is on a sell signal, and it is somewhat in decline along with this rally move. So that would bother me a little bit. But you do have a really nice OBV. So So typically, I'm showing you these breakouts. The PMO is not in a place where I would necessarily myself jump in. I mean, that's just my trading philosophy is I wait for a good PMO setup along with my EMA setup. So these have really great EMA setups, but the PMO is kind of overbought on all of these, but I think there are plenty of positives. This one is a barely breakout. I decided to throw it in here, but mainly because we had such nice volume here on that OBV pop. But as you can see, since that big volume move, we're seeing a decrease. So I don't like the interest seems to be failing a little bit there. But you can see that overall we're getting positive volume, and so there you go. All right, Tom, I left you all of about 4 minutes. I apologize. So
we got time. Actually, I think we were going to do the other segment starting around 12:35. So I think we're good.
Okay, cool.
Yeah, let's go ahead and take a look at some things here first. Now, I talked a little bit in that opening, some of the headline news, technical news, and so forth. I've really talked mostly about the aggressive sectors because that's what I'm interested in from a longer term bull market perspective. I want to make sure those groups are doing well, and they are doing well. But today, there's no doubt about it, and yesterday as well, this has been about energy. And you can see the XLE the last 2 days, we've gone from about 69.5 to above 71.5. So we're looking probably at about a total 3% move, maybe a little bit more just in the past 2 days. So I think when we're talking about breakouts, there's no doubt here that energy is one of the areas that we should be looking at. I did pull up my blog, so take a look at this. Yesterday or this morning, I pointed out that we broke out on the XLE and that were in an uptrend. I also had looked at a couple of the key areas of the energy space, one being oil equipment and services, which has not really performed very well, but we did break a trend line. And I probably could have drawn a bottoming, uptrend line here and maybe looked at this as more of a symmetrical triangle. But we did break to the upside, and also the relative strength of the oil equipment and services index relative to the S&P 500 also seemed to be making a little bit of a breakout here, which was important. But the area that's really been performing well within energy is exploration and production. This is the DJUSOS, and this was nearing another breakout where it closed yesterday. I'm going to give you an update on these charts in just 1 second. But here was the relative strength. And you can see that after pausing for about 6-7 weeks, we actually have started to break back up to the upside in terms of relative strength in this area. So if you click on these charts within a blog, you'll get them refreshed real time. So here you can see the XLE continuing that move. This is a really nice confirming breakout. Yesterday, you could see the interest pick up with volume surging a bit on the breakout. And today, it's going to be a very heavy volume day for the XLE. And while I don't pay as much attention to volume with ETFs, it does at least kind of paint a picture that there's more interest involved. And that's always a good thing. Here's the DJUSOI. This is one that has not been performing very well, been trying to figure out if it's bottomed or not. And I think if we can break through this 430 area, it would certainly help to paint a very bullish argument for this group. And we're getting close with today's action. This has been a really nice move on the DJUSOI these past few days, really all week. Huge move, 390 to 425. That's about 9% in 4 days in this industry group. And now you can see the breakout on a relative basis very easily. And then the DJUSOS has continued the move from yesterday, and it is actually making a breakout on an absolute basis. And you can see the relative strength turning back up. And we've seen over the past few months since energy bottomed, when we've seen relative strength moves, we have seen very strong ones. So this could go on for some time here. So with that backdrop, I wanted to look into energy in some of these areas for potential breakout candidates. So let's take a look at some. On the DJUSOS, a few stocks that caught my attention. And a breakout could be, to a 52-week high, or it can just be a break of a downtrend. And so I think what's interesting here is look at all the volume coming into contango, oil and gas, MCF. This has just been happening here over about the last 3 or 4 weeks. Looks like it may have put in an exhaustion gap with big volume on this move down. And look at all these hollow candles coming back up. Now, I am expecting that the downtrend is over and we're starting an uptrend. And so any kind of a pullback into this gap support zone with this rising 20-day moving average, I think that could present a pretty decent opportunity if you're a little bit more aggressive, because this is a much smaller stock. But the downtrend does look like it's been broken, and there seems to be some pretty nice accumulation taking place in the stock right now. FANG, FANG, this is Diamondback Energy. I think this one clearly is on a nice breakout. Look at the volume yesterday to clear the November high. That's what I look for. I like to see that confirming volume. It had been consolidating. It got very overbought. You can see the Blue Mountains, RSI up into the 70s, maybe near 80. And then through this consolidation period, you can see that we actually had dipped down into the 40s on RSI. Now we're back on fire again, moving into overbought territory. I wouldn't be surprised at some point to see a little pullback, but I would look for this price support around 115, 116 to provide some pretty nice support. And the last one that I have in the exploration and production area is NOG. And NOG has just been performing great. So after breaking out above this downtrend, you can look at the volume come in on this move, pull back to what? 20-day moving average, light volume. Then the volume pours back into it, another huge surge. And here we are sideways consolidating. Almost looks like I'm going to annotate this one because it looks to me like a symmetrical triangle after an uptrend. And it looks like we're trying to break it right now. So here, I would just say you kind of got this downtrend going right there. And then you can see here, had a pretty nice uptrend connecting the lows. So we were squeezing. Look at the volume picking up today. When we've seen the volume start to pick up, we've gone on big runs. So this one looks like the volume is picking up, trying to make this breakout. So NOG could be breaking out of a triangle pattern. So again, chart breakouts come in lots of different shapes and sizes. Sometimes they're 52-week highs. Sometimes they're just breaking out of patterns. They're breaking down trends. That's the way I look at these chart breakouts. So those were a few in that exploration and production area. Let's take a look at oil equipment and services. This is probably one of my favorite charts in the energy space. I think we just broke out of a bottoming reverse head and shoulder pattern on Halliburton. And this is a bigger company, so I'd feel a little bit better about owning this one, just from a risk-reward standpoint. But we were downtrending for quite a while, left shoulder. We went back up, put in the neckline, came back down, put in the reverse head. Right side, look at the volume coming in to establish the right side of the neckline. Pulled back here a couple times. Look at the failure there at the neckline. Came back down, double bottom, and now we are surging. We had one more failure, by the way. Looks almost identical. The candles look almost identical. And then we pulled back, got close to the 20, and look at this move with energy moving this week. I think we're getting a really nice breakout on Halliburton. And this always starts to clue me in on a possible reversing pattern, because if you think about a downtrend, it's a series of lower lows and lower highs. And as you look, you see the low always goes beneath the prior low. The high never quite gets back up to the prior high. And we make these, and it just continues on and on and on. Well, when you see a big move like this to come back to test that prior high, that's one of the reasons, in my opinion, why these reverse head and shoulders are so powerful, because the first thing it's telling you is that it's got enough strength to get back to a prior high, which, as you look on the chart previously, you don't have. So that's number one. Number two, look at the volume coming in. That is not a light volume advance. That, to me, looks like accumulation during the right side of this neckline forming. Then we pull back into the right shoulder, and boom, now we're getting the breakout to confirm the pattern. So this is from $46 down to roughly $38. So a breakout above 46 with good volume, I think, suggests a 54 target on Halliburton. So I think Halliburton looks really good. I know that we had talked about one of these reversing patterns a while back, and not that it's in energy, but let me just pull it up because I remember it. And that was Tractor Supply. When we had come back down here, this one clearly made its measurement already, but this is kind of similar. We're going down, we're putting in these lower lows, lower highs, lower lows, and then finally on this move, look at the volume come in, and we go back up and we test that left side. So now all of a sudden, it's not a series of lower lows and lower highs anymore. Come back down, put in the right shoulder, almost equal with the left shoulder, and then boom, look at the volume picking up as we break out. Went down one day. We actually had a little bit of a head fake on heavy volume on this gap down, but we never closed back below this this neckline. If you draw it all the way across here, we gapped down on an open, but we did manage to come back up, and this thing has just continued to power to the upside. So these patterns, even though they give you a measurement, the main thing for me is that they are signaling a reversal of a trend, and that can be really powerful. The other thing I just want to mention too about the XLE is that if you go down, actually it was in the article, so let me go back into that article. I also posted a weekly chart, and as you can see on the XLE, when we were on fire moving higher throughout 2016, look at these green arrows marking the rising 20-week EMA tests and how we continued to bounce off of that until we finally put in a high. Once we came back down and below that 20, we started this downtrend, and look at how many times we failed to get through that 20-week moving average. Now we've broken back out again, and look at the pattern. We're starting to hold on these pullbacks. So there's a lot of different signals here to me that's suggesting that energy has made that bottom. It's confirmed a breakout now to the upside, and we have a nice trend in play to trade in that space. One final stock that I had, and this was in the integrated oil and gas area. This was TOT. And so this is Total FINA. And I just like the pattern here. Nice move to the upside. As we pull back, we went back up equal high. We got rising lows, and it's having a nice day. Look at the volume starting to pick up. To me, this is a nice ascending triangle. After an uptrend, it's consolidating. It's been able to get that RSI back down into the 40s. And now it appears like it could be ready for a move to the upside. So this one isn't a breakout, but this is one that I'd be looking for to break out. And with that, you can see that we are putting up some of the recapped symbols that we took a look at in this chart breakout section and segment, symbols that I had looked at, and then also the symbols that Aaron had reviewed. And now it is time for Anatomy of a Trade.
Indeed.
This is a good segment. I always like this because these are real life trades. And, we try to walk everyone through current trades as well. And I've got a couple of those that I'll go over in a little bit. But do you want to start and go through what you have for the Anatomy of a Trade?
Oh, let's see. Where did I put that? I know I get busy with talking to you all in the chat room, and then I don't get to what I need to get to. Okay. All right. So IIVI was the one that I picked here, and this honestly, this was I don't trade enough to like have one every week. I just don't. So what I do is I pick out a chart and I look at what I would have done with it, and and what would have probably happened. So this is, I'll tell you right now, this is in a perfect world kind of trade here, but it it follows my methodology. So it's truly something that would have happened or could have happened if I had, if I stick to my methodology, this is what would have happened. But I can't promise you, and I never promise myself that I will. I try very hard, but a lot of times once you get in, it's just, wow, wishful thinking. So anyway, I picked this one. This is about the point where it would have hit my radar and I would have looked at it as a buy. And here are some of the reasons why. And I don't know if I can make that. No, I wanted to try and move into that area a little bit closer. But you can tell that there were all of these 3 EMAs decided to have positive crossovers right at that same time that we were getting an oversold reading above the 0 line. And it was turning up. It had been rising for a few days. So this would have been on my radar for sure. And that would have been about the time I would have gotten in. So let's just say, $37 is probably about the right. That's, well, again, I didn't actually make it. So about $36.50. Well, of course, you need to set a stop if you're going to stick to your methodology. And again, most of mine are mental. but I would have set my stop right just above that $34 line. Like I said, I sometimes will set the stop just a little bit higher. That's how I sort of tighten my stops, depending on the trade. And in this case, based on the distance here, as far as risk, I would set my stop right around that 34.25 area. Okay, so then I would be holding it and riding this lovely rally, but I had set a target, and I always set a target because that's, you know, I want to get up here. That would be a great target, but I need to be realistic and protect my investment. And so a lot of times I'm kind of, you know, you're either stopped out or, you know, you look at it and it's just, you know, I've got the profit, I'm going to take it and run. You know, you can half your position at a point like this, but like I said, more than likely, this is what I would have done. So the target would have been reached. That doesn't mean I'm going to jump out. What it means is I need to move up my stop loss because now I've got the profit. I could sell half, like I said, and then stay in there. But what I would have done is, like I said, my target had been reached, which was, you know, just about a little over 41.50. And so the time would be to me to set up a stop. And I would have set it right around that $40 mark because that's where we've got that low and that test of the 50-day EMA. And so I felt that would be the best place. You can also see that it matches up here with some previous overhead resistance. So that's where I would have set the stop. I would have been out. But I just wanted to explain to you what I would have done at the time. Now, a lot of people are saying, well, your PMO turned over, it had a sell signal. You know, there are other things going on with your indicators that could be a problem. What I use the PMO for mostly is to get in, not necessarily to get out. I want to follow my support and resistance lines first and foremost. And if I start seeing some of my indicators, you know, starting to go south, well, it's an attention flag. You know, I need to pay closer attention to this one because, you know, things are starting to turn over. Look at my stop loss, et cetera. So that's my anatomy of a trade. And like I said, admittedly, I didn't make this trade, but this is exactly how I would have done it. And of course, I had to pick one where my methodology would have worked great. So, but it does work quite well. It really does. You know, it's just, I just don't, I'm just not a regular trader like that. I don't, you know, I have a lot of other things going, to be perfectly honest, and I just can't watch it every second of the day. But I don't like to put in those hard stops. So, you know, I'm more of that intermediate term. When I buy in, I'm looking for a month-long hold. You know, I'm not looking for next week. You know, that's just how I trade. But I know, Tom, you've got some great ones that you've actually made because you are a short-term trader. You do trade almost every day.
Yeah, I love this stuff. You said you don't watch the market every second of every day. We had a few more seconds in the day, so I could watch it a few more seconds.
Right. It's, you know, I love my job. I love all of this, but, you know, that's just my choice. And I feel like I do very well with my intermediate term trading without, you know, having to invest so much time.
All right. Well, my strategy first for anybody who's new is I am, you know, pretty much a short-term trader. I'm a momentum trader, but I don't like to trade. I don't like to chase moves to the upside. I will occasionally buy breakout if I catch it right at the breakout level and then keep a tight stop in case it fails to hold the breakout into the close. But normally what I prefer to do is see the breakout, have a company report solid results. I only trade, well, I'm not going to say I only trade, but probably 99% of my trades since summertime, maybe even since the beginning of this year, have been stocks on what I call my strong earnings chart list, which is a list of, I don't know, probably at least 250, 275 companies that in their most recent quarter beat top line estimates, beat bottom line estimates, and the stock is in what I feel a very bullish trend on their chart. So it's really a 1-2 punch with fundamentals and technicals. And I just feel more comfortable trading these stocks. Devon Energy, DVN, this was one. And for a long time, I never traded an energy stock. I mean, when energy was so weak technically, it was hard to find stocks in the group, number one, that were beating estimates. And then number two, that had strong technical charts, because even ones that were beating estimates were struggling. Now, what you see here with DVN, there were a couple of key areas that I was watching. First, on this recent high here, we pulled back. Look at the volume coming in on the move to the upside. Now, we got incredibly overbought. There's the Blue Mountains. And so my strategy is to try to wait for a pullback, to price support, to a moving average, to gap support, to something that I can cling to as my stop area. And I like to do it with that pullback because it gets the RSI way out of overbought territory. And sometimes you have to have a little bit of patience. You get in and then they consolidate for a while, but I can keep my stop really tight. So I know I don't have the date of when I got in DVN, but I know it was in November because I owned it and did not get out when I saw these candles. So I kicked myself when it came back down, but it did hold on to price support. I continued to hold it here. And actually this morning I sold a little lower than where it is now, just because we were approaching this resistance area. I don't know if it's going to get through. Not going to hold to see. I'll let someone else hold. But this was a quick trade from, I don't know, 37 and change up to, I think I sold today 40.80 or something like that. But I'm out and took the money, and now I'm free to trade something else. That's the other thing with trading is I can, risk adjusted returns are so critical to a trader managing risk. And so now that money's been made. I'm sitting in cash with that portion of my account, and I can wait and look for something else that sets up similar to DVN. So I think this one obviously was a pretty good trade, and it was in that energy space because, again, now that the energy stocks are performing a lot better, this is a group that I am finding more and more stocks on my strong earnings chart list. So that was DVN. Another one, this one I actually had as a setup this week. And if you all are unfamiliar with the setups, actually, if you go into my blog and just go to the Trading Places blog, you'll see click here for a live chart list. Usually on Sunday or early on Monday, I will add some stocks in here, some potential trade candidates that I like. And this week I actually happened to buy 2 of them. There were only 3 that I put in here. Team was not one that I bought, but it's still hanging in there, it looks like. DNR, though, I did buy, and this one I just sold literally right before, maybe 45 minutes before the show started. But anyway, this one came right off of support, made a huge move, and look at the resistance area. It has struggled to get through 190. I didn't wait for 190. I actually had an order in just below it, around 187. But again, I'll wait and see if it gets through. But, another perfect example of waiting for a stock to get down to support, the RSI back into the 40s. And now as it heads into overbought territory and has overhead resistance, I wanted to get out. So DNR, I'll show you the other one here in just a minute. But let's take a look at the third one. And I think I sold this one yesterday. SCVL, I mentioned this one earlier. And it's continued. Actually, it's right about where I sold it yesterday. It was getting close to this resistance area. But here's another one. Great earnings. It gaps up, goes straight up. I don't want to chase it. So I literally waited about 3-4 weeks, came all the way back down, tested this rising 20-day moving average. I actually was looking at this tail, so keeping a support level in maybe around 23.50. Didn't want to lose that level. But this one had moved right back up, held it maybe 2 weeks, and it's gotten close to that 28 level. So, and I don't always wait. I've had so many experiences of putting a stop in, or not a stop, but putting an order in to sell a limit order right near the recent high. And I have come within pennies of getting out, and the stock reverses and goes back down to the bottom. So normally I don't place limit orders. I normally don't even put my orders out there. I don't want market makers to even see them. But as a stock gets up close to resistance, a lot of times I will just put my market order and get out. Just not to have to worry about if it goes back down to the bottom of this trading range. I just take the money and go. So I do tend to be pretty short-term oriented. Some of these stocks will continue moving up, and that's great. But if I can make my target percentage gain in 3 days or 2 or 3 weeks, I'm gone. I take it and go. Now, 2 stocks that literally I've just bought. One is FFIV. This is F5 Networks. I've been watching it. I love this move here with the heavy volume. It actually broke to a new high recently with the MACD also moving higher. Yesterday, it came down, and I saw was going below the 20-day. I actually put in a stop buy. So it's a different trade. It's opposite of a stop sell. So instead of selling a stock when it goes below a certain price, you're actually buying it when it goes above a certain price. So when it went below the 20-day, I actually put an order in to buy it if it went back above the 20-day. And it did, recovered, and is trying to move higher. My target is very, probably be up near that 135.5 area. If we get there quickly, I'll just take it and run. To the downside, it closed below the 20-day. And I might even, if I see it take out this low intraday, I may go ahead and move out of it. That'd be a pretty tight stop, but just what I prefer. And then the last one, actually, I think this was maybe in the 10 and 10 yesterday, but I did buy SBAC, and I did it right near the gap support, price support area. And once again, with the RSI down close to that 40 level, sitting at 38 right now. So again, I don't like to chase. This one had a higher price with a lower MACD, so I'm looking for a 50-day test anyway. We got it. Came down right to price support. I think my first entry actually was above one, might have been 161 and change. And then my second entry, I think, was around 158, whatever that high is. So I'm probably actually down on this trade a little bit, but I like my entry, and I'll keep this stop pretty tight. So anyway, with that is the end of Anatomy of a Trade. Hope you enjoyed it. The symbols that we covered today, you can see on your screen. And now we will move into the 10 and 10.
10 and 10, and we have quite a few ready to go here. But the first one, as we told everybody, is going to be ST Microelectronics, STM.
All right, let's take a look at STM. Well, it's in the semi space, and these stocks, I've noticed a bunch of them failing at the 20-day moving average, and that's what's happening here after it broke down on some heavy volume, but it's holding gap support. So right now it's in consolidation mode. I actually like it, but I don't want to buy it here. In fact, if I had bought it at gap support, I might have sold it when it failed to get through the 20, just in case it pulls back and consolidates further. So what I'm looking at here, there you can see the close right before this huge gap up. This was the earnings related gap up. You also can see that prior high candle right there. So that is kind of the tight support that I would be watching, but I don't like anytime I see the failure at the 20-day moving average right here. It's not that I don't like the stock. I just, if I have a little bit of profit in it, I might just take it, so I don't have to sit back and watch to see if I can get that breakout above the 20. Also, if it fails and goes back down to the low end at support, I can always get back in. So I'm just, again, in a mode where I want to take profits. I don't want to see profits erode. And if you start seeing these failures, then you can run into some additional weakness. So I would be careful with that.
Okay, the second one, there's just a lot of discussion about small caps. We're going to, if you don't mind, revisiting IWM. The main thing is everybody's like, when is it going to really warm up here and, get moving? Because we know that, as you've been saying, the seasonality, et cetera, but we're just not seeing that breakout yet.
We haven't seen a breakout, but it is up in the second half of the month. I mean, the 15th is when things historically shift. And I'm not, history is obviously what we've seen in the past. It's no guarantee of what we're going to see in the future. But the Russell 2000, historically, if you look at the annualized returns that I've posted in a couple of different blogs, by day in the second half of December, it's pretty astounding. The annualized return on the Russell 2000 is, I think, like 74% in the second half of December over the last 30 years. And the first half of December, it actually has an annualized return of minus 3.5%. So I think what we saw in the first half of December is very normal. This is what we tend to see, a little bit of profit taking in small caps, but the second half is where we tend to move higher. I think we're in a great pattern here. I have no problems with the Russell 2000 right now. I actually own this. I continue to hold the IWM in one of my accounts, but this is a nice little cup, in my opinion. I think we're putting in a handle, and I expect we're going to get a breakout. If we close above 155, I think that obviously would be very bullish. It would set an all-time high. That's what I would be looking for. So I think to the downside, the rising 20-day moving average and gap support is what I would continue to keep an eye on. So you've got this prior price low and the 50 down here. But I would even say, maybe if you keep that bottom of gap support right there, see the 20-day moving average coming up from underneath. I suspect, given the seasonal tailwinds that we tend to see in the second half of December and just the overall market, which is very bullish right now, I'd be surprised if IWM closes below that rising 20-day moving average. Like I said, I'm in it. I think it's bullish, and I would continue to hold it.
Okay. The next one we have is Lam Research, LRCX.
Yeah, Lam is in that semiconductor space. You've seen a lot of these charts look like this. Check out the failure right now at the 20-day moving average. I mean, they're all pretty much doing the same thing, where they are struggling to get back through that short-term moving average. So we've got to move down, heavy volume. I certainly, if I was annotating this chart, I wouldn't want to lose sight of that because that was not light volume. But we did hold on to price support, in my view. We had a straight up move in the second half of October, and it really came from this level right here. That's where you got a breakout. So if you go back and you look at the prior highs, this high, when we broke out, we went back and retested it. But when we broke out here, we never went back and retested it until right here. So I think that could have put in a bottom, but we might be sitting in this $12 or $13 range for a little while. So a break above about 191, 192, I would say is bullish. A pullback, though, back to 178 or so can't be ruled out here. And I actually would like the trade on the long side a lot better if we get back in close to that 178 area.
Okay, the next one we have, number 4, is FRGI.
Okay, FRGI, Fiesta Restaurant Group. Well, the consumer discretionary space has been doing very well. Restaurants have been doing very well. This one, I would say, just by looking at the chart, has been an underperformer, but it is holding on to what I would consider some pretty good support. So you had prior tops right about there. So you can see we did go down, it looks like one day below, and then we came right back up. But during this move to the upside, we've seen the golden cross, the 20 moving above the 50. And now on this pullback, you can see we're testing this 20. And over the past few weeks, that has been a pretty, actually, I'm going to go back and say the last 5 or 6 weeks, that has been a very solid support area. So I like that. One thing I don't like about this stock is it's not as liquid as I'd like to see a stock. I like to get at least 200,000-300,000 shares traded on an average, daily basis. And this right here, I mean, today's volume's 59,000. We're already past the halfway point of the day. So I don't like the volume, so I would bypass it because of that. But technically, from a price perspective, as long as it holds about 1890, then I'd be okay with this one.
Okay, next one, number 5, is ON. ON.
Another semiconductor. This is a semiconductor.
People are interested there.
Yeah, and we've seen nice moves on some of these semiconductors. That was one of the things I think we talked about last week on momentum sleepers or under the radar. I know this was a group that I was really interested in, but the group has made a bounce, and ON actually has done very well and continues to strengthen, which I find very bullish. So I think we got a beautiful trend here to the upside. Notice the last high, though. You can see the negative divergence. So that's what I would show here. So right here on this very last high, you can see that the MACD was much lower. So slowing momentum, I think if you look at the last move to the upside here, volume was just kind of so-so. It wasn't, that inspiring. And as a result, once we failed to hold the breakout level, it was straight down along with many of the semis. So I think the stock still looks okay, especially getting back up through the 20. We didn't even fail on the first test, which I think is big. I think we could have a nice little cup here, and you can always use that with the parabola. So let me see if I get that here. Here we go. And so it looks to me like maybe what we're looking at is something like this, where we're coming back up, put in the right side of a cup. I think this is a bullish pattern. So, and it's certainly outperforming many of its peers. So I'm still a fan of ON. I would maybe watch that rising 20-day now. I'd like to see it hold that on any pullback.
All righty. See, next one, number 6, OSTK, Overstock.
Yeah, Overstock I mentioned in my blog. I forget which area I was looking at. Specialty retailers, which I'm a fan of. And if you take a look at the breakout here, I think this pullback is simply, and by the way, look at that doji with that long tail to the upside off these really bullish candles. So, and the volume, we definitely marked a top. I mean, it's always easy hindsight to look back, but I would have suspected that based on that day's candle that we probably reached a near term top. To the downside, I'd be looking for some support right here at 65 with the rising 20-day coming under at 59. You might say, well, that's a big range, but this is a very volatile stock. In 2 weeks, it went from 42 to above 80. So, it's going to be hard to pinpoint this thing down to 50 cents in terms of, your risk. But I do think once you hit support and get closer to that 20-day moving average, the better I like it.
Okay. Let's see, the next one I have is Edit, EDIT.
All right, Adidas Medicine. Bearish engulfing candle at the top. So that's usually a short-term sign. Let me just highlight that. That's usually not a good thing when you see that if you're in a stock. Pulled back, came back a little bit further than I like, but it's back into this gap resistance zone and looks to me like off an uptrend. We could be trying to put in a cup. Next area to try to negotiate, though, is this gap resistance where we initially failed today. I think if you get a close above 27.50, I'd be looking for a retest of that 30 level.
Okay. Number 8 for our Canadian friends, ALA.TO.
All right, ALA. I don't know the symbols there quite as well as I know them in the U.S.
Right.
Alta Gas Income Limited. I like today's candle if this holds, but the volume has been picking up on the downside. If I were to get in based on a candle, I would use today's low as my stop, an intraday stop, because if that truly is a reversing candle there, we shouldn't go back below the earlier low. Now, for me, I'd probably wait until the end of the day because we could see selling again this afternoon and we could close at the low, which would mean there's no way I would want to be getting in. So I want to see this hold into the close, but I would keep a real close eye on the development of this candlestick today and see whether or not we can hold on, because there is some support in this area. Recent lows right there. We did break down a little bit yesterday, but we're trying to rally back. I could even look at these prior lows, the intraday low there, and kind of claim that this entire area is kind of a zone. So maybe if you move back below, say 28.40 or so, that would be a pretty bad signal on this stock. I would be looking for a reversal off this candle if it holds into the close.
Okay. We got 2 more left. TK.
All right, TK. I think this might have been one of the oil groups I was looking at. I saw this ticker come up. Yeah, I mean, I like the action on this pullback right here to the 20-day. It looks like it printed a little bit of a hammer. I would prefer a hammer off of a little bit more selling than what it had here, but it did bounce, kind of similar to that FFIV chart that I showed earlier with the MACD turning up here, volume coming in. I would like to see this continue, the rising 20-day continue to hold. So I think for me, if I was annotating just as a reminder, I would put in a nice little arrow there just to designate that 20-day moving average as a reminder. Because when that MACD is strengthening like this, normally you're in a stock that is beginning to accelerate to the upside, and we're certainly seeing that in terms of price action. So pullbacks should hold that rising 20-day. That's what I'd look for.
Okay, very good. The last one we have is 3D Systems. So I guess you know that symbol.
Yeah, it's shocking. DDD. I don't know how they came up with that, actually. Let's take a look here. Definitely in a downtrend, failed at the 50-day moving average. Volume trends, not good. I mean, I don't see anything here that I like. I'm not a bottom fisher. So if you know something fundamentally about the company and you just think that the value here is great, that's unfortunately just not my style when I look at these charts. But I think it's pretty clear that you've got overhead resistance on this trend line, and this has been going back since June. So until that breaks, I can't even begin to think about getting into the stock. And then even if you do break, then you're going to have this price resistance and overhead gap resistance. So that is the close here back at the end of October, right before the early November gap down. So that 11.5 to 12.25 area looks like it's going to be major price and gap resistance if we can first break this downtrend line. So you got a lot of stuff going on above current price. I would pass.
All right, that completes our 10 and 10 to 1. Let me give you a quick recap of what we just did.
I think I might have made it in close to 10 minutes because I know
I think you did do really, really well, actually.
Maybe 10 and 12.
Yeah, I'm pretty proud of you, actually.
Thank you.
I don't know if that matters, but yeah.
It matters. It matters to me. Thank you.
Okay. Let's see here. I apologize there. All right. So there we go, 10 and 10, and these were the symbols we covered. I do put these summary slides in our Market Watchers recap, so you don't have to furiously write them down. They will be in today's recap. And all of these stock symbols and all of those annotations will be in our Market Watchers live chart list as well. But with that, I know I need to do our final market update. So let's go and do it. See what the market's been doing. All right, so here is our candle glance, and as you can see, it looks like the Dow hasn't made a new intraday high, but the S&P 500 has. It's currently rising and hanging out right now at its intraday highs. We can see the Nasdaq is rising as well and is now hitting intraday highs. Russell 2000, we did see a pullback. If you recall, we didn't have that pullback yet. But since the show's been running, we've gotten a little bit of a pullback on the Russell 2000, but it's back up ready to make new intraday highs. The TSX currently is really mostly unchanged. Bad morning. Set up this flag, though. We'll have to see if there's a continuation of this rally following that flag. Treasury yields are down somewhat, reading 24.88. UUP is mostly unchanged still. Commodities are slightly higher, with USO having a really interesting day with a giant gap down, a really nice rally. It's now pulling back toward yesterday's close, but it is still in the positive. But that rally move since this morning is pretty impressive. We can see that gold is forming a flag right now. It is higher, currently reading 120.27 for GLD. And the VIX is unchanged now. We're looking at 972 for a VIX reading, which is still really low and does suggest bullish sentiment out there. Advances are leading declines. Let's go look at our scooter movers. The top 10, which doesn't change that often, we're still seeing some discretionaries up there with Urban Outfitters, Michael Kors. So following that, we've got energy, First Solar, FCX, Freeport. It's a real interesting mixed bag here in that top 10. But what I really want to show us is the big changes. So these are the big movers today as far as the scooters are concerned. And I love this function, how we can just hover over the symbol and get a quick peek at what's going on. You can see that with Transocean, we've got a nice breakout from that declining trend channel. Now it's reaching up toward overhead resistance around $11. See Hess Corporation also having a big move, another breakout from a declining trend channel. Looks like overhead resistance, though, isn't too far away at $47 or $48. And that's all I have for our final market update. And at this point, I'm going to hand it back to you, Tom, just if you had any comments.
Actually, I don't.
Oh, wow. Okay.
No, I was just looking at some of the areas of the market. I mean, clearly energy is the space where everybody's looking right now. Last couple of days, that's where we've been seeing the biggest strength. I do like the fact that financials are bouncing back. I mean, I don't need to show the chart. I think I showed this earlier with the banks.
Mm-hmm.
But I love the fact the banks are rallying. We're getting the 10-year treasury yield, in that uptrend. And I think that should continue to bode well for that space. But having other areas besides those four aggressive areas moving higher, energy breaking out, Materials, many areas of materials have been doing extremely well. And even some of the defensive areas, healthcare had been doing pretty well, although it's kind of hesitating now. Really, the only area that has struggled a lot recently has been the utilities. And that, again, is going to be normal when you see rates moving up the way they've been moving. So not really anything from a chart perspective to show, though.
Yeah.
If you want to get into that
Yes.
next area, we can talk about the books. I know you have some favorites. So
Yes. I'm going to spotlight one in particular right now, but I'm going to go to, let's see. Sorry about that. Let's go to our main page. I want to show you how you can get to these books. So the book of the month that I'm going to have, and you go all the way down to the bottom of your member homepage, all the way down, and you're going to find the Stock Charts bookstore. We have very, very, very competitive pricing. I suggest you do check here first to see what our stock prices are. And one of the cool things is if you become an official chart watcher, I think is what it's called, you can get a 50% discount here in our Stock Charts store. So that's pretty hard to beat. But I wanted to go into the beginner resources. And, we talk about John Murphy and Martin Pring. Absolutely excellent books. I think that if you need something to just start learning about what we do here, both John Murphy and Martin Pring have written really the best ones on the market. I'm going to show you here in our top 10. Technical Analysis of the Financial Markets. That's the original book by John Murphy. Excellent book to learn about the market. And also Martin Pring, of course, Technical Analysis Explained. But the one I want to point out, and an author I want to point out, is somebody that I read very early on in my studies. My father, Carl Swenlin, handed me this book by his friend, Dr. Alexander Elder. And he was at ChartCon in 2016, last year. And it was just a pleasure to actually talk to him. But what I wanted to talk about mainly as far as this book, there are a lot of great things about it. You guys are always asking us about position sizing and, stops and, time, how much what your strategies are. And, Dr. Elder concentrates on the overall management of your money and your time and your strategy. So this is a book not necessarily on learning the indicators and charting. It really talks mostly about how to manage your account, how to use technical analysis to do that. And I find this, it was really a great guide for me and helped me a lot in coming up with my methodology as far as my position sizing, et cetera. He would still completely frown on my position sizing, but I think that, it's a great guide for me. And, he does review the basics of trading stocks and futures and options. So you do still get that. But he really talks, he used to be a psychiatrist. Okay. So this guy really does understand the actual behavioral aspect of trading and traders. And so he really gets into that psychology so that it helps you not only understand yourself, but also the big picture market and what other people are thinking and how that can come into play. The other bonus here is if you scroll down, he also has a study guide for this book. So you can not, as you're reading it, you can actually go in and practice on your own. So highly recommend these books by Dr. Elder. Come Into My Trading Room is great. And his Trading for a Living book is also, I think, a much needed, let's see. Yes, we did come into, yeah. Let's see, Elder. There you go. Yes. So this is the other one, Trading for a Living. This was, I believe, this was his original book. Of course, this is a newer edition with the new Trading for a Living, but it's the same idea, psychology, looking at your strategies. And then a lot of what Tom talks about too is your risk management, figuring out your targets. And then one of the really, really great things is the record keeping, because I'm pretty sure in that book he actually has like sheets you can copy, or build a spreadsheet with what you do every day, what you write down, see what your stocks are doing, have they made targets. I mean, it's just really disciplined. And I'm not that disciplined. I really am not. But I think that this is a great way as a new trader to be, to understand more about what's going on in the market. So that would be my book of the month, the Dr. Elder books. And I know I talk about them quite a bit. I have a little bit more time here. So it's not Charles. That's what I know him as. Charlie. Charles Kirkpatrick also has some really great books. I think this one is excellent. I get a lot of tell me what books I should read. This one I like because he's really easy to read. Of course, I read it after struggling through the Edwards McGee book, which is 1940s, and it is a difficult read. I actually don't recommend it, but I had to read it for the CMT, the Chartered Market Technicians program, so I had to read it. But this came in later in our studies, was this particular book, and I absolutely adore it because it was so very easy to read, very much like Martin Pring and John Murphy, who are both really easy to read. But this is, if you wanted just one more book to add to that bookshelf, as far as after your John Murphy and Martin Pring book, I think this one would be really great. And not a spoiler, but Charles Kirkpatrick will be coming on the show next year. So look forward to talking to him and his book and the markets in general. So that's what I have for our stock charts book of the month. And I'm going to just give you a quick little summary here. So again, come into my trading room and the study guide that goes with it. I could have also written down here Trading for a Living, because I think both of those books are must reads. So what do you think, Tom? Have you read any of his books?
I am a big fan of John Murphy. I haven't really read a whole lot of technical analysis books. I've read John's work, which I think is absolutely brilliant. And I also learned from Steve Nissan on candlesticks. Those are the two that I probably, really got into. And it was really John's work. And I've read a few of his books. I don't know if I've read them all, but I think I've read 3 or 4 of his books. The thing that I really learned and helped me a lot when I was looking at the market was the intermarket relationships that he often talks about, and how, one thing happening in the market can have a, significant impact in some other area of the market. So what I wanted to do, I'm going to go ahead and just grab the screen from you for a second, and just to highlight one of the blogs that we have at Stock Charts, which is John Murphy's market message. And if you scroll down within his message, he just came out with this article yesterday, I believe. Actually, this is the one today. I think I wanted to focus on the one yesterday, because I actually looked at it, and I wanted to kind of go over one of the things that he talked about in here. And so where was it? Well, he talks about how the rising yield hurts utilities and REITs. I mean, so some of the stuff I talk about, I'm not taking credit for it. I learned a lot of this from John Murphy. But I wanted to hear this area here. Rising yields aren't good for technology stocks. So John is talking about all the relationship above where, maybe it's more common knowledge, but he pointed out that the rise in yields really tends to hurt the performance of the XLK, with the technology ETF, relative to the S&P 500. So here you can see the line, the XLK versus the S&P 500. Remember, Chip was talking about this the other day, that you can plot these ratios by using the colon. So here John has the XLK colon $ SPX. So this black line is showing you the strength in technology relative to the S&P 500. And the green line you can see is the 10-year treasury yield. So as long as the 10-year treasury yield is moving lower and, just kind of basing or whatever, technology is, it's got that environment out there that allows it to really motor ahead and outperform. But if you notice recently during this uptrend, November and December, as we've been moving to the upside, technology has run into some headwinds. And on a relative basis, we saw a really weak technology group at the end of November heading into December. And they are starting to roll over again with the 10-year treasury yield breaking out. So it's this kind of work that he does that I think is just invaluable as a trader, because I do like to look into different areas. I like to find out, which areas that I want to concentrate in. It doesn't mean I'm going to buy the ETF, because I like to buy individual stocks and try to profit from some of the short-term inefficiencies in the market. I'll call them inefficiencies, but really it's just market makers, and stocks go up and then they pull back and have to consolidate for a while before they go back up again. But this is the type of work that John does. And if you're a member of Stock Charts, you get this as part of your membership, which I can't stress how important this has been in my, personal trading over the years, and just my learning about the market and the different asset classes and so forth. So this you definitely want to check out. And, this would probably be the second thing I would look at after I signed up with Stock Charts. As soon as I came into the site, as I've said before, I think the first thing I would do is I would go into this blogs page, and I would go down to the middle part, and I would join Chart Watchers, because this is the only area you're going to find anything from John Murphy that's free. So Chart Watchers definitely would be my first thing I do. And then I would join and I would follow John Murphy, because he's going to give you the overview. For those of you maybe who don't individually trade and you're just looking at what maybe is going on in the market, what you think, and maybe some themes for upcoming years, I think a lot of the work that John Murphy does is really amazing. So I know we've got about 7 or 8 minutes, and we haven't taken time recently to go through a whole lot of mailbag questions. And I've seen some questions that keep coming up. And I know you've been answering some questions in the room, Aaron, but maybe you can kind of look back and see if there are any that you have that might, you may be able to talk to the group about. But a couple that have come in, I know for me, that I want to address, because it's been coming in for a few days now. One is there, well, not is there, but what is the formula for annualized gains when I talk about annualized gains? And what I'm doing is I'm looking at the period and figuring out how many trading days are in that period, and knowing that there's about 253 trading days in a year. And so if I've got, say, 25 trading days in a sample that I'm looking at, and let's say it's produced an average of 2% over those 25 days, well, in order to get to an annualized amount, I'd have to multiply those 25 days by 10 to get to 253 or thereabouts. So I'd also have to take that 2% and multiply that by 10. So I'd have an annualized return of 20%, even though the actual return for that period is only 2%. So hopefully that explains that one. I know there was a question that came in, what time do I tend to trade? Do I do pre-market, after market, during the market? I would say I'm trying to think if I have traded outside of normal market hours this year, and I don't think I have. I have in the past used aftermarket prices before, where a stock comes out with earnings and gets a big spike up, and I held into the earnings. I get lucky or something. I don't even want to wait until the next day. Then I might take advantage of it, but that's very infrequent. I trade mostly during the day. I think that the early part of the day in an uptrend, a lot of times you see weakness and a lot of folks will bail. I look at the first hour of the market more like amateur hour. So if I'm looking to get in, a lot of times I can use that first hour on pullbacks to get into a price that I really like. And likewise, I would say when I sell, I tend to sell a little bit more at the end of the day, just to capture, the advance as it moves into the close. There was a question.
I really quickly put up on the screen how to become one of those certified chart watchers, because I mentioned that you can become If you just go to our sales certified chart watcher or HTML, you can see it up here, or just look up certified chart watcher. If you take the test and you pass, you get a 50% off coupon on all future purchases, not just your next one, not just this for the month, but on all future purchases. So it's $29.95 to take the exam, but I think if you're looking to fill up your bookshelf, it would be worth it. I think you'd save on your very first purchase and get that money back. So one of the other questions I think that I had was about wondering if scooters in the 70s and 80s are less overbought than those in the 90s and above. The main thing to know is a scooter is not an overbought, oversold indicator. And so if it's in the high area, I mean, you can tell when you look at our top 10 scooters here, that means it's got a really good batting average, in my opinion. And you want the guy with the highest batting average at the plate. So I use it as a confirmation tool before I go into a trade. I want to see a scooter that's either improving or is already in the hot zone. So it could have maybe a scooter value of 30, but if it had a value of, 0.2 last week and now I'm getting a 30 reading, that's good enough for me. So that was the one question that I had that I could answer. But I think it's time to wrap it up already. Can you believe it?
Yeah, we just got a few more minutes. We do have one more day, and I do want to make sure everybody understands, too, that tomorrow we're going to do a year-end review. So definitely come in for that if you're available and not already traveling for the holidays. I guess the final question that I had that had come in was about, do I check sectors and industry charts frequently? Well, I can tell you that I checked both of them while Aaron was doing market updates today.
Yeah, I was going to say that's constant for you, isn't it?
Yeah, I do that throughout the day. I mean, it's the first thing. One of the first things I do in the morning when the market opens is I look to see which sectors are, doing well and which ones are lagging. I like to see all sectors performing well, and they have been. I think that's a hallmark of a bull market. And even the defensive groups, while they're not outperforming the S&P 500, except for the recent move down in utilities, all of the defensive areas really are still performing well. They're just not performing as well as the rest of the market. So it really has been a great setup throughout most of 2017 and as we head into 2018. And but yes, I look at those charts all the time, and I do scroll down from the sectors into the industry charts to see which areas, just like I talked about at the beginning of the show, I like to see which industry groups are leading within each sector as well. So we got, 2 minutes left, maybe 30 seconds or so. What are you thinking about as we go into the close today?
Oh, goodness. I've been watching my indicators pretty closely right now, and my intermediate term, I wrote about it yesterday. My intermediate term indicators are looking soft. They've started to turn over. That almost always means at least consolidation for the market, if not a pullback. So I'm really going to be watching those IT indicators so I can let everybody know. I'll write about it today if we're seeing a negative crossover on those intermediate term indicators.
All right. Well, I am going to be watching the Russell 2000. I think this is the time of the year for this group. Their all-time high close came at the beginning of the week when we finished at 1548.92. Right now, we're trading at 1549.45. So we are on the cusp of potentially another breakout in a group that tends to do extremely well from now through the end of the year. So I will be, without a doubt, continuing to watch the Russell 2000 into the close, and also keeping an eye on the bond market. I think that as interest rates go up, that means money's coming out of the bond market, and that is also helping to fuel the move to the upside in stocks. So just a couple things to wrap up here. Again, tomorrow we're going to do a year-end review. So please join us if you can. No market watchers live next week between the Christmas and New Year's holidays. But we will have the best of market watchers live. So we'll have some recent special guest interviews replayed along with some key educational segments that we've done over the past several weeks. So it'll still be a lot of great information. You can check the webinars page for schedule as we go into the end of the week. Our next live show after tomorrow, we will be here for tomorrow, but our next live show after tomorrow will be Tuesday, January 2nd, 2018. So with that, want to thank everybody for stopping by. We certainly appreciate you coming in. Please remember to complete the survey as you exit. Love to get that feedback to hear what you think of Market Watchers Live. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great afternoon, everybody. We'll be back here tomorrow on Friday. Happy trading.